The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out with the German DAX. As you can see, after we went up and touched those highs from September the 22nd, we came down yesterday after we gapped down quite a bit, much like we did in the U.S. stock market. We went down to the 61% retracement. We actually went just a tiny bit below it. But what's interesting about this chart, if you'll take just a second to look at it, you'll notice that from the low on the 16th of September to the low of the 30th of September to where we were yesterday, that is a perfect head and shoulders pattern. And the right shoulder is higher than the left shoulder, which is insinuating it is bullish, which in fact, as you can see, it is so far today. Now, those are very close to lunar times. Each one of those times on the 16th of September, the 30th of September, and then also the 13th. Those are very, very similar because they are lunar cycle. You know, they're 14 and a half days apart. And what's interesting is our full moon does not really occur until Sunday the 15th. And here we are yesterday. We made a pretty substantial bottom here that we're going to look at here in just a second. But whether it is the bottom or not, Mr. Meridian from Cycles Research, told us that he was looking around the 13th, the 14th of the month for a significant bottom, and if that's it, it could be. Remember, the Bradley model is, that's today, Bubba. We're right on there. This is where you fish or cut bait. So we're going to know Monday morning, most probably, what direction we're going to go. Yesterday, I had some folks ask about, how I came up with that number of 2110 in the S&P. Folks, all I was mentioning when we were on the air, all that was a 1.618 expansion going back, about 10 days. That's all that was. If we take a look at this, on a little bit longer time scale here, you're going to be able to see it that you'll be able to see it quite easily, but you'll go back that we went back about 5 days to get to the 1.618. And if you go back even farther, which is not on this next chart, you'll see that there was also another 1.618 number that came in at that particular time, which was, very important. If we looked at the Dow Jones, the Dow Jones E-mini at the same time, you'll see this same type of phenomenon popping up here where you'll see some multiple patterns. A lot of things were happening at this 1.618 and 1.27, going back into September. So this is a very important point. Now, whether this is the bottom or not, frankly, I am not sure yet. We've had a really strong rally out of here, but folks, look at this thing. I mean, it's had strong rallies. It's nothing for the Dow, to run 300 points, and we've already gone 280 points off the bottom of this thing already. So we've got a situation here, that's 180 points off the bottom. There should be some resistance up at the 181.50, 18,150 level in the Dow. That'll be the 61% retracement off of the high. But if we get these Dow futures anything above 18,200, which would be the Dow up about 150 today, that would tell us that the bottom is most probably in. Now, the lunar cycles are very, very accurate, but they're very, very short-term oriented. This one happens to be very important because it's also a super full moon where the moon is at perigee. It's exactly, or not exactly, but it's 252,000 miles from the Earth, as close as it gets. So there's extra, electromagnetic stuff. So we'll take a look. Now, we do have some good information from my good buddy Al Larson. From Money Tides out of Denver, Colorado. Truly one of the three smartest men that I've ever met in my life. And Al's got a really important time frame of 10:30 today, which is Fed time. which will be the subject of our guest coming on at the half hour, Shane Smolian of wolftrader.net. Yes, excuse, somebody in the den has made me laugh. Al Larson has wrote a book called Your Electric Life, and it's you should get it, folks. I think it's either free or $4 or something. It's one of the best books describing what really happens with this lunar stuff, physiologically. And Al has double PhDs in electrophysics or astrophysics and computer science. He's one smart puppy. So pay attention to what he has to say. Okay, now we want to move on to a couple other things. We have this situation that we talked about earlier in the week, and that is this doggone gold market. And we were looking for this gold to possibly have some type of a major bottom in here. And I said on Monday, I have to respect this super full moon that's coming in here on Sunday. So I wanted to wait until Monday to see what is going to happen, with both gold and silver. They have not gone up. They haven't gone down, but they also haven't gone up. And that's a little troubling, because if that was really a major bottom, you would think that it would have exploded off of the bottom, and it wouldn't have had this, pullback of not really doing very much the whole week. In fact, it hasn't done very much. This morning, you'll see what we've done in the gold market. It's very easy to see that we had a beautiful Gartley pattern formed down here at the 1247 level. That was an ABC off the last 4 days, but we didn't go very much. We rallied $6, of course, right off the bottom. But in order for this thing to really be a good bottom, it's got to get above 1265. And then you know that that's the bottom, and you got another some more to go. So it's going to be really interesting here in the gold and silver over these next few days. So we'll keep an eye on that. Mr. Z, thank you for putting all the lunar information into the thing. You'll notice that those dates that we were talking about, September 30th, October 16th, those are all very, very close by. So we want to watch those very, very closely. One other thing I wanted to mention, we had Rich Anderson on the show yesterday, and I wanted to reiterate what he said, and that is about this hog market. I know most of you folks don't trade hogs, but you ought to take a look at them. They trade quite a bit as far as volume and open interest and everything, but they are below the cost of production. In other words, farmers are losing money every time you they raise a hog, and that's not going to stay very long. You know that for a fact, because people don't like to lose money unless you work for the government, and then that's a totally different thing. But watch these hogs, because the two things we want to watch for is if the bottom does come in, we're going to get a really nice buy pattern, probably 2 or 3 weeks out. It'll be a retracement pattern, mostly a Gartley, something like that. So that'll give you a pretty good idea that we're going to be watching this one very, very closely. Also, this cattle market is also, it's way below $1. It's way below $1 a pound now. So we're looking at 97 cents a pound, almost 96 cents a pound in cattle now, which is a lower level that we've had in a long time. Remember, at 125, which was 25 handles ago, Rich Anderson was rather bearish. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we've got a guest from the planet Jupiter. Can you believe it or not? Well, wait, excuse me. It's Jupiter, Florida. Bill, are you there?
I'm here, Larry. Yes. Good
How are
to you this morning? Good. I'm great, Larry. Thank you. And by the way, I signed up for your service 24 Fibonacci 24/7. I'm very excited about that. So, question I have, Larry, and it's kind of a follow-up to the caller on Wednesday from Tampa. I know you mentioned you had a 40-pip stop, and, your first profit objective would be at least at 40 pips to cover that stop. On a 40-pip stop, Larry, I'm assuming you're trading off of a 15-minute chart to get a stop of that size. Would I be right on that?
Yes, that's correct. Usually on anything that I trade. In fact, this is an interesting question because someone in the den has asked a question of why the stops are so important, and indeed they are. Because if you don't use stops, you're telling the market that you know more than they do, and that's the market knows a lot more than any of us. So you've got to be able to protect yourself. However, there are some people that don't use stops. They are disciplined enough to use a desk stop. In other words, once the price is hit, their pain level gets to such that they take the positions off, and that's also a way of trading. But you have to have that super discipline, and there's going to be that one time out of 100 where you're going to get really spanked really bad, either from a report or an assassination or earthquake or something. But that will happen. Even sometimes that'll happen with a stop. But regarding the stop placement itself, most of the things we trade, Bill, as you know, can be traded between $300 and $500, with the exception of two things. One is gold, which usually takes about an $800 stop because you're looking at a contract that's got $120,000 value, and then also crude oil, which has got a $50,000 value but has more volatility than just about anything we trade. So that has to use about an $800 stop also, around 80 pips. So Other than that, all the currencies are around 40 pips. The grains are around, $400 to maybe maximum $500 on soybeans. Treasury bonds, you have to risk a half a point, which is $500. And stocks, it's real simple because if you have a stock, let's say you have a stock like Apple trading for 117, you just multiply the price of the stock by 3%. So 117 by 3% is going to take you to about 4.5. So you round it out to $5. So you can trade Apple with a $5 stop. Goldman Sachs at a 170. 3% of that. There again, you're almost at $5. So that's how to do it. And your first profit objective, of course, would be the amount that you put at risk because it's a business of making money, not being right or wrong. I hope that helps, but that's pretty much what we're trying to do.
No, it's very helpful, Larry. So, and your ultimate profit objective, I'm assuming maybe is a 2-to-1, and then are you doing multiple contracts, and obviously at 2-to-1 you take 1 or 2 off and you let the others ride?
Yes, that's true. The only time that we don't take them off, Bill, is if we buy something and all of a sudden, I'm talking here in just a minute or 2 or 5 minutes, you've made your first profit objective. The market is telling you that, hang on because I'm going to give you a lot more. That's usually when you come out of point D or point C, when we're looking at the patterns. If we come out of there really, really strong, much like we did today in gold. Gold came out off of that 1247 low really, really fast. It gave you $6, $7 very, very quickly. And then it got to your $8 level. So at that point, you can raise your stop to break even and then not even worry about the first objective. Just, hang with it and see if you can make it go higher because we don't know what's going to happen next. That's that's always an unwritten rule that we have to work under.
Sure, but obviously price action gives you an indication of momentum.
Yes.
And sure. Larry,
yes,
one other question. So when you look at a 4-hour chart, I'm assuming that you're trying to get direction over the day or over a longer period of time before you go in and execute on a 15-minute chart.
Correct. I start with a 4-hour chart, 240-minute, because that'll give you 6 or 7 weeks of the whole chart. You could look at a daily, but I like 240-minute, and I do dailies too, because for the newsletter I have to do longer term. But then I go down to an hourly, and then down to a 15-minute. And if the market's really wild, like on a Fed day or report day, I'll even go down to a 5-minute chart to try to find a really nice entry. That's what I was doing yesterday in the S&P, was just watching that 2110 level and and just trying to find how close I could get. And sometimes they work, sometimes they don't, but most of the time you're going to get a better shot at pattern recognition than you will with most. It's better than a coin toss, let's put it that way.
Oh no, but probabilities are very high. So Larry, on a 4-hour chart, are you looking at support and resistance? Are you looking at patterns on that 4-hour chart, or just trying to get the general?
Yeah. I'm looking at the patterns because the patterns will give you the support and resistance. Because old highs will give you support, old lows will give you resistance. That type of thing. And then I watch for the normal patterns, the Gartleys, the butterflies, the 3 drive to a top, 3 drive to a bottom pattern. And I watch the key ratios of 786, 618, 1.27, and 1.618, and then I try to put it all together. And when I have a lot of ratios coming together, at least 3, like we had in gold here on this 15-minute chart, that tells me that I have a pretty good spot here to pays your money and takes your choice. That's basically what I try to do.
And so as you go down to the 15-minute to execute, are you seeing the same pattern from the 4-hour chart? Probably not, but you're just looking for a good.
It's one of the patterns, but it's not going to be the same pattern because the patterns, if you're going to trade a 15-minute chart, you trade a 15-minute chart. You can't trade a 15-minute chart and then go to a monthly. That doesn't work. So you got to trade the chart that you're on. It's the old Yogi Berra thing. You got to dance with the girl you took to the dance. So that's really what you want to do. So if you're buying it on a 15-minute, you should trade it on a 15-minute.
Okay. Terrific, Larry. Very good. Looking forward to the service.
Thank you very much, Bill. Good to talk to you, and I hope it's really nice on the planet Jupiter today. Hey, Bill, where is Jupiter, Florida?
It is just north of West Palm Beach, if you're familiar with West Palm Beach.
Oh, the Breakers. Yeah, I love that place. That's the old. I love that place very much.
10 minutes
All right, my
north,
friend.
Larry. Take care.
Thank you very much, Bill. Thanks for calling in. Okay, we got a break. We're going to have a special webinar here on the 26th of October. I'm going to introduce a pattern that Gartley missed. And I've talked about it a few times, but I've never really described it the way that it should be described. It's really a great deal. TFNN has bought a lot of books from Wiley on the Astro books, and you're going to get a free book. You get a whole bunch of free things. So if you go to www.tfnn and look at October 26th, there's going to be a lot of free things available, money back guarantee. All of the people that are members of the 24/7 will get a free copy of the book. And anybody that signs up, of course, will get a free copy of the Astro book that Shane and I wrote. And it's basically Shane wrote it, folks, and all I did was just walk, just to prove it as it went through, because we had an idea of what to do. He's a brilliant man with a terrific computer sense and knows astrology backwards and forwards. So this is coming out, folks. More and more astrology is coming out, so we've got to pay a little bit more attention to it.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have the wolftrader.net. Shane Smolian on the line. Shane, are you there?
Hi, Larry. How are you?
I'm buckled up waiting to see what happens for this super full moon that's coming. But what I'd like to do is turn the show over to you. You've got some information, of course, about the Fed that you always do, but we're looking at your chart number 2 now. So why don't you take over?
Sure. Which chart is this? This is the one that.
This is
Oh,
the
there
one
we
your
go.
graph. Yeah.
Sure. Okay, so today I would like to focus mainly on the Federal Reserve and their influence on the markets because right now we're in an unprecedented time of Fed influence, and this is really the driving, or what I would call unnatural force of the market, and it's driving the elections, it's driving the market, and it's just a very important thing to watch. But before we get into that, I just wanted to show everybody a tree here of this is just how I visualize the market forces, or forces, if you will, and we can break them into natural forces on the left and unnatural forces on the right. So before we had the Fed, if we go back into, the 90s and the 80s, or the Fed, an active Fed that we have now, we were predominantly looking at the natural forces in terms of astrology. And so we have these transits, we have cycles, and we have the speed. Those are three main components that we watch. And so when we look at the transits on the left, we're talking about the New York Stock Exchange transits that I show on a weekly basis. We're talking about the Bradley barometer that you use. And these are things that are actually happening in the sky at any given moment and that are affecting the world. And they're affecting the social mood of the people and affecting the markets because the markets are affected by the social mood of the people. Underneath that, we have the cycles. Now, the cycles are kind of like, you can think about them as like echoes of the past. So we would look at how a cycle behaved on a solar cycle, which is just an annual cycle for the last 5 years. I like to look at the last 5 years since 2009, let's just say, or 6 years. And that's very important because that gives us an idea. It's kind of like the stock trader's almanac that you would see. And then we have the lunar cycles, which is basically a monthly cycle, and that's as the moon passes through the signs. And so it's kind of showing us the repeatable patterns that occur. So I don't know if it's so much of a force, but it's just the patterns that tend to occur. And then on the right-hand side, we have the planetary speed, and that's something that I really have been researching in the last year, and that the speed of the planets actually affect how the market rises and falls. So the faster the planets move, the more the market will move up. The slower it moves, the more the market will fall. And that's amazing because that has nothing to do with transits, and it tracks the market almost perfectly too. And then on the right-hand side, we see the unnatural forces, which is what I've called the Fed juice. And the Fed juice is a term that I use to track the Fed activity. And I look at the Fed activity on a daily basis. Everything from their repos to their mortgage-backed securities to the lending to the treasury purchases. There's a whole collective aggregate of activity that the Fed does, and we've taken that and put that into an indicator, and it tracks the market almost perfectly now.
How sensitive is it though? Is it within hours or a day, or how sensitive is the indicator?
That's a very good question. So we actually, it's interesting that you said that because this week, which we're going to show in a later chart, we had a rare occurrence, which was on Monday, the Fed was closed, but the market was open. And then the very next day, the market collapsed. It went straight down. So I think there's about a day lag on this. I think they need about a day. And somehow, some way, I can't tell you how that money's getting into the market, but it's getting into the market because there's strong evidence here that that's occurring because the charts of the market track the Fed, what the Fed is doing almost perfectly. Like you can look at the Fed chart and almost tell what the market's doing.
Okay, that's what I was curious about because I know some of these are so darned accurate that I'm just curious if it was within hours or a day. One day is plenty because if you look at some price support, it'll give you a pretty good idea.
Yeah, I think that with the astrology, you can get it down to the hour. If the Fed is not involved in messing around, you can get these turning points down to the hour. But I think the Fed is more of just like a constant feed that they're just feeding in, just like this trickle. And somehow, some way, I don't know how that's occurring, if it's a repo with the banks and the banks buying the stocks. I don't know, or the Fed is buying the futures. Because the Fed came out recently and said to Congress, or they're making some testimony saying that the Fed should be allowed to buy stocks in the event of an economic downturn, right? But they didn't mention futures. And in the 1980s, as you know, after 1987, it was rumored that Ronald Reagan created this plunge protection team that basically was authorized to buy the futures. So it's not clear to me what they're doing with this, but I think it has something to do with the Fed and the banks and the market. I just can't tell you exactly how that mechanism occurs, but I can tell you that as this Fed activity increases, the market goes up. As it drops, the market drops. And it's almost without exception. Like we can go back and I can show you, and I had that chart below the January 2016 drop. It tracked it almost perfectly.
Mm-hmm. Okay, do you want to go to the next chart?
Sure.
Okay,
sure.
There we go. This is a January cycle or January decline.
Yeah, so this is what I'm talking about. So if you take a look here, this was the January 2016 decline, and on the top we have the SPY, and on the bottom we have the FEDJs. Now notice these are mirror images of each other. You would think that the bottom chart, which is the Fed activity, is a derivative of the first chart. You would think that it's like some type of an indicator like a stochastic or a MACD. It has nothing to do with the market. But look how it tracks the market. If you take a look at label A here, that's the top that we had, and the Fed activity was at a peak, and the Fed activity fell, and the market subsequently fell. Then, to me, the most striking part of this is from B to C to D. You can see that it makes that first bottom. It's a double bottom, makes the bottom on B, goes up to C, comes back down to D, and then they rally together again, once again. So, you know, it did drop off on the right-hand side a little bit, the FEDJs, and then it took off again. But these are almost mirror images of each other. So if I can look at the Fed activity and tell you what the market is doing, there's their link here. I mean, it's the correlations are very high. They're almost, it's like 80-something%. I ran the correlation on it. It's in the 80s. Mm-hmm. So there's in some way, somehow, this money's getting into the market.
Mm-hmm. Now, we have a question from one of our listeners. You probably don't have enough time to answer because we've only got about 30 seconds to the break, but I'll repeat what the question is. They're asking, how do you calculate the Fed juice data, and where do you get that data from? Is that secret, or is it?
Well, yeah, it is in terms of how I calculate the data, but I will tell you this. This is a composite indicator of actual Fed data that I get on a daily basis. I actually get the data from the Federal Reserve. They post it. It's live information. The problem is that there's so much raw data out there that most people just look at it and they say, okay, well, you know, 2 billion here, 1 billion here. What difference does that make? But we've actually put all that activity in together to make an indicator, and it ranges from many things. I mean, even the purchases of mortgage-backed securities. I mean, this is a big deal. They're taking all of this junk assets off the balance sheets, and now the banks and Freddie and Fannie, they have all this cash. So where's that cash going? It's going into the market somehow.
Okay, we're going to take a little break, and we'll be right back with Shane Smolian of WolfTrader.net.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're talking with Shane Smolian of wolftrader.net. And Shane, we're looking at your Tuesday and Monday situation on the Fed juice. Do you want to explain that?
Sure. This is a very interesting chart here. And Monday had a rare event. We had the markets open, but the banks were closed. Now, usually when we have a holiday, the banks and the markets are both closed, but this was a unique situation. Unique for that reason, and unique because of the amount of Fed juice that's going into this market on a daily basis. So the market is very sensitive to the Fed. So on Monday, there was no juice. You can see here on the bottom left, it spiked down to 0. So I actually track that as a number because the market was open. You know, I usually, if they're both closed, I don't track it, but it tracked at 0 that day, and there was no activity. So then the next day, the very next day, the market just completely collapsed. It fell straight down, and it's been stammering ever since. And you can see on the right-hand side, there's two little candles after that big red candle. You can see that what happens when the Fed is able to come back in with the juice, the market will start to go down, and then around 10:30 or somewhere in that area, the market will hit a bottom, and then it will hook back up. So you'll get these candles where the market starts to fall, and then it'll have like a green body on the candle because it can't go down. So it gives good trading opportunities if you take these if you take short trade in the morning, long trade in the afternoon. But you can see that it knocked the market out of its rhythm, I guess you could say, because the Fed, just one day of this missing caused the market to fall. But I think Yellen's back in and she's got this under control again. I don't see this as going down much further from here.
Well, it certainly doesn't look like it wants to. It's getting more bullish now. Not the last one, but the next chart is a very interesting one, and this is the one about the 1 week time frame where you're looking at Miss Yellen's picture here.
Yes, and I just talked to one of our economists here. We have an economist here at Wolf Trader that was telling me to warn everybody, and I'll just throw this out there, that the economy is slowing down, the jobs are slowing down, that we have 21 of 30 economic indicators that are headed lower, and to be careful about warning about a bull run from here. And so I just want to put that out as from the economic standpoint that yes, things are not good. I understand that, but I'm telling you this from the Fed perspective. The Fed perspective is the following: that we have these record numbers from the Fed coming in, and this has been very helpful to both the market and also the incumbent party, which is Hillary Clinton at this point. And we have these astro cycles, these heavy cycles that have been going down, 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 down. We've had this incredible negative influence, and they're finally coming to a bottom now between end of October through the end of December. So with this much Fed juice coming into the market, I would think it's going to have a very inflationary effect on the markets, and that we should see a rally after this. I don't see much holding it back. Now, the extent of the rally, whether it's going to be a year or 2 years or a few months, that remains to be seen. Maybe the economy will weigh it down this time, but we've seen no evidence of that in the past. I mean, we saw in 2011 things were worse than they were now economically, and it rallied even higher from there. So, if I just looked at it from the Fed perspective, I will tell you it looks like there's a rally coming.
It's certain. I was laughing about the economist part because when I was in graduate school at Indiana, I think it was Paul Samuelson came to visit us, and he said that the main reason for astrology was to give economists a 50-50, something like a 50-50 chance like astrology has. In other words, it's almost as tough as trying to find the astrological findings of the market. But with astrology, you're dealing with numbers, and the problem with the doggone supply demand, it changes so much that you just don't know what the heck's going on out there.
Well,
Now,
go ahead.
No, go ahead. It's your show.
Well, I was just going to say that, it's been a very chaotic, these markets, because you have the Fed in there doing, this is essentially chaotic action of the Fed. And there's a force now, there's this exogenous variable in the market now that's random, that an organization is doing to put money into the market. So it really affects the cycles of the astrology. What I would tell people is focus on the positive side of the astrology. When those cycles bottom, those are bullish opportunities. Where the negative cycles are not really going to go down that much when you have this force in there that's just so powerful keeping this market up. And this has nothing to do with reality. This is not about the economy. This is not about jobs. This is about, a government. What you want to call it? It's not government. You talk about that all the time. But a central bank basically stimulating the market, and it has nothing to do with anything related to the economy. I mean, other than they don't want to raise interest rates. People talk about that too. I mean, if we raise interest rates, now the debt, not only does the debt increase, but the interest on the debt increases of the United States. So the Fed is really in a tough situation because they know they need to raise interest rates, but in terms of the market and in terms of our debt, why would we increase it's like you saying, I'm going to take my credit card and I'm going to raise the interest rate from 10% to 20%. You're not going to do that because you're going to pay more every month in interest. So that's what the United States is facing right now with the Federal Reserve.
We have a question from one of our listeners about, do you have a specific date where you think this potential liftoff in a bullish mode would start? Would it be a breakout into new high grounds, or what are you looking at as far?
That's a very good question. I think yesterday was probably an important low. And the next, the chart below, we'll get into the weekly transit, but probably that was an important low yesterday. And, October has the chance at the end of October to be a little more bearish, but from what I see right now, I mean, the low could be in, and this thing could be off to the races and headed higher. Now, the one thing to note, too, is that Yellen, this is very political. So I brought this scenario out. What if Donald Trump wins, and then Yellen basically pulls the plug on this juice, and it's like, okay, I'm not going to, we're going to let the market fall. Because he basically came out and trashed her and said, she should be fired along with everybody else that he says should be fired. But he said that she should be fired. So we got to watch the juice here. I mean, what if he gets elected and that happens? So it's really a matter of monitoring this data on a daily basis and a weekly basis to see where we're going forward. But from what I can see right now, that this thing is ready to lift off.
Mm-hmm. Well, someday there has to be a spot where they just can't buy anymore, isn't there, to just keep printing paper?
Yeah, well, that's a good point, and I talked about that in the newsletter, that there's, when you're trying to reach the speed of light, you can't do it because it takes an infinite amount of kinetic energy, right, from a relativistic standpoint. So the Fed, in the same standpoint, you can see that this is going parabolic, their juice, right? And so at some point, yes, Larry, you're correct. At some point, they are not going to be able to do this, but what is that point and what is their limit? I think they've got a lot more to go here. I think they can keep just ramping this up and cranking this market higher.
Well, they've gone from up to over $4.5 trillion. So what's not to say they can't go to 6, 7, or 8, or 10? You never know. If it's a tulip bulb, you don't know how high the price of those bulbs are going to be, but it's certainly been going straight up.
Absolutely. And I had just emailed you. I don't know if you got it. I just emailed you another chart that was showing the Fed purchases. But the Fed is still purchasing, extremely high levels, like $3.5 billion. And if you look at these agency purchases, they're still very, very high. Sorry, 300 $300 billion, $350 billion they're still purchasing in agency securities in 2015, and we're not in a QE period. So they've basically just stopped purchasing treasuries, and now they're purchasing the bad stuff, which is the mortgage-backed securities. So this stuff is still happening. It's as if QE never ended, and you can see the data on a daily basis.
Okay, we're going to take a little break here, and we'll be right back with Shane Smolian of wolftrader.net.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Shane Smolian at wolftrader.net. We've only got a few minutes here, Shane, so why don't you tell the folks about your service, how they can contact you, and what you supply and stuff, because you've done a fabulous job of putting out some great information, so fire away.
Thanks, Larry. Well, you can go to the website, www.wolftrader.net, and you can sign up for the newsletter. It's $36 a month, and you get a newsletter once a month. I usually send a couple bonus issues there about the Fed, and I send solar cycles. And I'll send out a transit every week. I don't know if you can show that image on it was like the last transit image that we had. But I sent out the transit
sure.
each week, so you can see just the raw transits on the market. And if you want to get the full service, that's Twitter service. It's $225 a month, and you get full Twitter service. You get video updates, and you get nightly email updates. So if you want to go full time on that full service, if you want a nightly a daily update, that's the one to go with. If you want real, and it's also real-time updates throughout the day. I basically comment on the market throughout the day, all day, and show you what we're doing.
You're actually giving trades there, aren't you?
Well, I'm just showing them what I'm doing. I'm saying this is what I'm doing, and I provide them commentary, and it's live. It's a live feed throughout the day of just what we're doing here on a daily basis, including commentary and news postings and things like that.
Okay, now when will you be able to be on with us again? How about in a couple of weeks or even sooner? If you feel like you'd like to come on at something
Sure.
that's different, would you be able to
Absolutely,
come on
absolutely.
anytime?
I mean,
Because we really enjoy having you. And
Thank you. Can you go to the transit chart
we have
real
one
quick?
other question.
Okay.
Sure, just give me 1 second.
Sure.
I'm not the sharpest knife in the drawer, and it takes me a little second to get there. So, dear, I think I got it. Hold on here. No, I'm not going to be able to get it up. I'll have to post it after you get off the air.
That's no problem. It showed a sample of the transit for the week, and basically the transits this week, since the Fed was out Monday, it tended to follow the transits more this week, and it showed a bottom yesterday. So the idea there was that we were at some type of a major low, and the newsletter, that comes with the newsletter. So if they're interested in that, they can subscribe and get that too.
Thanks for joining us, my friend, and stay safe.
Thanks, Larry. You too. Take care.
You bet. Shane Smolian of wolftrader.net. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.